Hello and welcome to Gold and Silver Assets. It's Sunday the 10th of May 2020. Today I thought we'd look at the fate of different currencies, past and present. And what's the fate of your particular currency? We'll start by defining what a fiat currency actually is. So it's a currency that has no intrinsic value of its own, and its perceived value comes from a government decree and the mandated use of that currency to pay taxes. It relies heavily on the confidence of the public, and con being the operative word here. So why do I say that? I'm sure that many of you will have heard this quote from over 300 years ago that says that paper money eventually returns to its intrinsic value of zero. So that got me thinking, what are the mechanisms by which currencies disappear? During my search for the answer to this question, I came across the work of Mike Hewitt from 2008. He showed that all currencies that have ever existed, only 23% are still in existence right now. 19% were destroyed by hyperinflation, and the remaining 58% are no longer in circulation. Let's look more closely at the data for the currencies that are no longer in circulation. So there are 609 such currencies, and I've put the link in the description which provides a whole list with details of each of these currencies. So the median age was 17 years, which seems rather short to me, but we can see that the range was huge. So the shortest living currency was 1 month, and one currency lasted as long as 591 years. That's huge. And that was actually the French livre. So what was the fate of these 609 currencies? Well, 31% disappeared through monetary reforms, dissolution, or other kinds of reforms. And a relatively recent example of this is the loss of a whole bunch of European currencies to form the euro in 1999. Only 16% of currencies ended through acts of independence. So, for example, when former colonies renamed or reformed their own currencies. And 27% were destroyed by acts of war. And indeed, in the Second World War, that saw at least 95 currencies vanish. And finally, 26% were destroyed through hyperinflation as a result of overissuance of the currency by the government. I found all that data all very interesting, but it did actually bring up a whole load of questions for me. And the thing that I found was that the currencies that were looked at were a real mixed bag, with some evolving over time. So, for example, if you think about the British pound, that started off on a gold standard, and then it went bimetallic, and then it went fiat. I'm therefore not sure if the median age of the currency tells us the whole picture, because I don't think that we're measuring apples with apples. So the question I have are as follows. First of all, how many of those currencies were purely fiat at some point? Also, how long was the lifespan of that currency from the time it became fiat to the end? And what was the mechanism or cause of the pure fiat currency ending? And how does the fate of fiat currencies compare to the fate of the non-fiat currencies? I think these answers to these questions will be very enlightening. And the answers to these questions can help inform us about the future of many of the current currencies in circulation at the moment. So if anyone knows where we can get this kind of data, or if there are any studies out there that answer these questions, please do let us know in the comments below. As far as existing currencies go, there are 176 currencies in circulation. The median age is 37 years, but again, the range is very large. So it ranges from 7 months, that's for the Venezuelan bolivar, to as long as 315 years, which is the British pound. As far as I know, the majority, if not all, of currencies that exist at the moment are purely fiat. and they're either floating or pegged to another currency such as the US dollar. And this is a situation that has no historical precedent. The other thing to note is that all existing fiat currencies have depreciated relative to gold in the past century. This chart shows that the level of depreciation has not been minor, and in fact all currencies have lost at least 90% of their purchasing power over time. We have viewers from different countries all over the world, each with different currencies. So what do you think is the fate of your particular currency? I'd put it to you that whatever the fate, the everyday person will somehow lose out. So, for example, if it remains in circulation, its purchasing power is going to continue to diminish. And of course, the other possibility is inflation and hyperinflation, which is going to destroy the purchasing power even more. If we look at war, well, of course, the public never benefits from that. And that just leaves us with a change of the currency by independence or reform. And I find it hard to believe that the ticket doesn't get clipped during that process. It could be said that the world reserve currencies fare quite differently from other smaller currencies. And although the strength of the currency is an important property for a reserve currency, it's not the most important factor. So, for example, in the long term, the Swiss franc has been a better store of value than the US dollar. So, in addition to strength, the reserve currency must come from a dominant and stable economy. There must be access to a wide range of financial assets denominated in that currency, and the volume of financial instruments in the market must also be large. There should also be a high level of liquidity so that transactions are easy, but also large transactions can be made without affecting price significantly. And this chart shows very clearly how the global reserve currency status has changed hands roughly every 100 years. I'd really like to look at the data for each of these currencies at the beginning and the end of their reign and see what properties each of those currencies have. My impression is that each currency would have had a significant tie to gold at the start, and then near the end that currency would probably have devalued relative to gold. Meanwhile, the currency of another country would have been strengthening, and its currency then goes on to swoop in and take over the reserve status. And the currency that does take over has never been purely fiat to start with. There's always been some tie to gold. So there seems to be a recurring pattern throughout history. There's an increase in spending, easy credit, and sanctions on free trade. War and empire building also seem to have played a central role in loss of reserve status in the past. And as I mentioned, currency devaluation also plays a big part. So what can we conclude about the fate of the US dollar, particularly when we're in a situation where all currencies are fiat and there's no non-fiat alternative currency in circulation that currently fits the requirements of a potential reserve currency that I mentioned earlier? Could we get a simultaneous global hyperinflation? Well, that's possible, but I think more likely is a monetary reform. And if history is anything to go by, then gold would be involved in that reform in some way. And if that is the case, then I wonder what the implications are for countries whose central banks don't hold any gold. So lots to think about there, and I think it's worth thinking about and considering what you think the fate of your own currency is going to be. So we'll move on next to the market report after this short break. Welcome to this week's market update. So we'll start with the S&P 500 and let's see how our little lemmings are doing. Well, looking here, it looks like they're defying gravity and levitating, so it's not really following the picture that we're seeing over here yet. So obviously these things always take longer than we expect, but we were talking about this ascending wedge. The breakout we suggested probably has occurred over here with a gap down, and now we're getting what may be a retest. The question is, will the price continue to go up and actually test this trend line, which means we'd be looking at the index going above 3,000. Now, this is all very strange, this kind of price behaviour. If you were to just look at the chart and look at the last couple of days, you'd have seen, over 1% moves upwards. And so you'd have thought, oh, everything's lovely out there. But of course, as you know, this green candle was on a day when it was announced that there's a huge level of unemployment in the USA. Over 30 million are unemployed. That makes no sense whatsoever to me. So I still think that this market is headed downwards based on this chart pattern. So where do we go from here? Do we go up further to retest that? Well, if we actually zoom in, and this smaller chart here shows the index on an hourly scale, and interestingly you can see another ascending wedge that's forming on a smaller scale. So on this chart here it looks like this. So to me that suggests that we are still going to break down. Sometimes these patterns do pop up the top a little bit before coming down, but I'm not expecting it to go above 3,000 at this stage. When this is going to happen, I don't know. These things always take longer than you expect. Moving on to the gold price in US dollars on the daily scale. And we had two potential patterns that we were looking at. We had this ascending wedge, which we've drawn here in orange, but the other possibility is an inverse head and shoulders that forms a continuation pattern. Now, it's difficult to know which of these two are correct because they have two very different target prices and outcomes. Part of the problem is that we've got long-standing overhead resistance, but also support below due to the price action that dates back to 2011, that kind of time. And so we're kind of in a sideways trading zone. It's not really a trending market at the moment. And so we need to see a breakout from that zone before we start getting into a trend. And that makes it very difficult to assess the direction of the next movement in the short term. Certainly in the long term, we remain in a strong uptrend. Looking more closely at the recent price action, if this is a wedge, then we did see a breakout over here, and then price went back up to almost retest that lower wedge line, and now we're moving sideways. But also note that we're seeing what appears to be a symmetrical triangle forming. And these break out and produce strong trending price action. The problem is that we don't know which direction this is going to break out in. If it does break out above the trend line, so we're looking at around the 1720 level, then I would expect movement upwards towards the 1800 US dollar level. Now, if you look back at the monthly chart from my previous videos, you'll see that there's very strong resistance at 1800 US dollars, and I'd be very surprised if it blasts through that on the first go. I think it will eventually, but just not the first time. The other possibility is a breakdown below the lower triangle line, and that would give us a target of around the 1575 level. Moving on to silver in US dollars on the daily scale. And interestingly, that long-term red trend line that we spoke about in multiple videos previously seems to be holding, and price bounced off of that yet again. But we've also got the centre of the channel line, which is drawn here in grey, and that's providing some resistance. So again, it looks like we might well be forming some squeezing price action in the form of a symmetrical triangle. And again, we would need to watch for the direction of the breakout. So if it breaks this lower trend line, which would actually again also coincide with that long-term support line in red. If it breaks that, then we'd be looking for a target of around $13 and a break upwards would give us a target of around 17.50, which would fit in with the overhead resistance over here. But again, it's very difficult to tell you in advance which direction it will break out. You just have to watch for a break and close above or below those trend lines. And just a note about the gold-silver ratio. Last week we were speculating on whether this was an inverse head and shoulders, but we would have had to have a break above this area here for that to be confirmed, and it never did. It actually just broke down significantly and actually went below the right shoulder. And so that invalidates the idea. It's very difficult to know what's going to come next with this because we don't have any clear patterns. So it's just a matter of watching. And moving on to the GDX on the weekly scale. And looking back, we had originally looked at this horizontal channel as a hypothesis, but then with the price action that we saw recently, we considered the possibility of an upsloping channel as shown here. And certainly the upper channel line seems to be acting as some resistance there. And the question is will that resistance hold? One thing that one of our viewers pointed out recently was this bearish divergence that we seem to be seeing here. And that would certainly support some potential downwards movement again. The thing I'd be wary about and to remember about the RSI is that bearish divergence works very well in retrospect, but as price action is occurring, this divergence can be negated. So, for example, if price were to blast through here and move upwards, of course the RSI would also move upwards, and that would actually negate the bearish divergence that we're seeing now. And so I do look at it, but it's not really a particularly reliable indicator there. So just always take it with a little bit of a pinch of salt. And if we zoom into the GDX on the daily scale, again, we seem to have this wedge that's been forming, similar to all other markets. And again, we had what appeared to be a breakout of the wedge, but the upper horizontal resistance and support line actually acted as support, and so price bounced off of that and moved upwards. But if you look at this, it seems to be retesting the lower part of that ascending wedge line and hasn't broken through it. We also haven't quite broken through and closed above the sloping version of the channel that I discussed earlier. The other thing to see is that volume is still continuing to decline. So I'm still a little bit skeptical about this as a potential breakout with further upwards move. It's not impossible, but I remain skeptical. And so I'm still sitting with cash on the sidelines waiting for potential bargains. But let's see what happens. So I'll end by just thanking everyone for their comments, and I particularly enjoy the ones where we hear about experiences in different countries. I think it's really very informative. Anyway, have a good week. Don't forget to like and subscribe, and we'll see you next week. Bye.